Good evening, good evening, good evening, ladies and gentlemen. It is your Realtor Hugo with another live credit scores. Your key to renting and home buying success is the topic of today's lesson. So I hope you're all strapped in and ready to learn a little bit more about real estate and how it can benefit you and those around you. As always, I am your Realtor Hugo, licensed in Maryland with Long and Foster, and it's always a pleasure to speak with you. Goodness gracious, sorry, Instagram. We are going to be on all your major platforms. So if you have any preference on your favorite stream, feel free and check me out on YouTube, Facebook, LinkedIn, X, Instagram, and Twitch.com. So I am literally everywhere. Thank you to everyone that was on the open house. I really do appreciate it. I know the signal's always bad on those when I'm remote, but I really do appreciate you all bearing with me and tuning in. And yeah, awesome property. Really excited for everyone that I saw today. I hope that we get more applications and that we can see, some great tenants come out for the property. So, really exciting stuff. At the end of the day, we're here to talk a little bit more about how credit can work in the home buying and home leasing process. So today's lesson is going to be revolving around credit scores, what they are, and what may impact them. So let's go ahead and get started. Number one, what is a credit score? A credit score is a three-digit number between 300 and 850 that represents your credit worthiness. It is derived from your credit history, which includes how you've managed your debt in the past. This score directly impacts major financial decisions like renting an apartment or buying a home. Now, scores I've never seen. Well, I shouldn't say that. I have seen low scores. I have never seen a 300. Um, I believe the lowest I've ever seen has been a 450. I don't know what particularly you have to do to get a 300. But I can tell you from my own experience in my own credit journey that if you're anywhere underneath the 600s, it's not a good place to be. So, yeah, you can imagine between 300 and 600, and then between 600 and 850. So, after 700, you tend to get better rates, obviously. And then after 800, after actually 780, you pretty much get the best of the best. So, um, 850 is that ultimate max out 100% completed level, but it is possible. It's just a game that you have to play. You have to, manage your debt and your income and your expenses, and your score will reflect your ability to do that. Number two, why your credit score matters in renting. Landlords use credit score to assess how likely you are to pay rent on time. If you have a higher score, you may get better rental terms, the lower security deposit, or reduced rent. However, a lower score might mean more hurdles, including possible rejection of your rental application. It's not impossible, and I myself have made very much huge advocacy cases for people to get into properties that had low credit scores. Now, do we want to make it a win-win for everyone? Absolutely. So these clients were also willing to bring something else to the table that was something that could be of service to the landlord, and that sometimes was a voucher, or sometimes was more money up front in the sense of a larger security deposit. So there is a limit on what you can technically hold on to. So most landlords I've noticed as of late, they are only requiring 1 month security deposit. For legal reasons, it's easier for people just to deal with that much. So at the end of the day, It is an indication of how consistent you are in paying your debts back on time. And that's just an indicator of how long you've done it over years. Because not everyone leases immediately or for long periods of time, but people have credit cards for decades. And that can be a really good indicator of how much and how consistent you are with your bills. Because if you're missing out on those, you might be missing out on other things too. Number three, why credit scores are crucial for home buying. Mortgage lenders use credit scores to decide whether to approve your loan and what interest rate to offer. A higher score could secure a lower rate, which means significant savings over the life of your mortgage. If it's essential, it's essential to understand your score before applying for a mortgage. Go ahead and look for your FICO. Find a provider that offers it. Go to myfreecreditreport.com. Add yourself to Credit Karma, whatever you need to do, but get an idea of where your credit score is, and then be prepared for it to be different when you walk into the lender. Now, they're not doing that on purpose. They're doing that because they actually use a different formula to calculate how they calculate these loans. So don't be discouraged, but if they tell you that there are derogatory marks or things that you need to improve or might be worth improving, take that advice. Don't take it as something personal that's, them getting on you or you not being able to buy a house. No, they're trying to prepare you to be as financially fit as possible to be able to do this. Remember, they represent the bank and they are supposed to be looking out for the bank's interests. They want to only lend to people that are capable of paying the money back and therefore making the bank more money. So they don't want to lose loans and they don't want to lose clients. Needs to be a win-win for everyone. So you got to have the qualifications, you got to know what your credit score is like, and you got to work with a lender that you trust, because if they're asking you for documents, you got to provide those documents. Number four, factors influencing your credit score. Your payment history makes up 35% of your score. So timely bill payments are crucial and the easiest way to keep your score up. Credit utilization, or how much credit you're using compared to your limits, makes up 30%. That's the second easiest way to maintain a good credit score. Not have an exorbitant amount of debt that exceeds over 30%. Keeping this ratio low is vital for maintaining a good score. It absolutely is. And that really is the easiest way to improve your score and also kill your score. By improving your score, you can pay down your debts faster to get down these ratios and also maintain good habits. By killing it faster, if you exceed any one of these levels by any stretch, you will see that in your credit score the next month. Let you miss a payment, unless you have like one of those grace payments, but let you miss a payment and see that score drop like 50 points. Number five, credit scores ranges and their meanings. Scores range from 300 to 850. A score below 579 is considered poor, while a score above 800 is excellent. Being in a higher range can open doors to better financial opportunities like lower interest rates and favorable loan terms. So, like I always said, being in the upper brackets is always better because people can trust you with more because you've been responsible with more. It just goes hand in hand. Number six, strategies for improving your credit score. To improve your credit score, always pay bills on time, as late payments hurt your score. Also, keep your credit card balances below 30% of your limit. Checking your credit report for errors and disputing inaccuracies can also give your score a boost. So, there are some little things that you can do like that. You can also have that Experian boost that helps for a few points. You can tie up your utilities and start reporting those. You can work with a company like Built Rewards, that's a credit card company that helps you actually report your rent payments as credit purchases. and almost like a prepaid credit card. You're paying your rent on the card, and the card is paying the landlords. So that can be a great way to build credit at the same time of paying off your rent. So there are tons of ways to improve your score, but you got to be mindful about it and active about it, because it's very easy to swipe and very hard to get those scores up. It takes time. Number 7, avoiding common credit pitfalls. One common pitfall is high credit utilization. If you max out your credit cards, your score will drop. Applying for several credit cards in a short time also negatively impacts your score. It's best to space out applications and keep spending in check. Now, what happens? Why do we get dinged on these reports? Well, basically, the more hard inquiries on the report, it does damage it. It will come up eventually, but it's unfortunate just the way the system is. Furthermore, the utilization, when you max out those cards, you can see the points drop dramatically. And getting them back up again can take a really long time. It's really nothing you can do more than pay off everything immediately, or go through the process and paying it off slowly, because the moment that the utilization is there and the maxed out amount transfers over to the next month as a pending balance, it'll show up and it'll report. So if you're paying off your credit on time and all of this, it will help maintain your score, but you will see it start to lower. Number 8, renting versus buying, how credit scores factor in. If you're renting, a lower credit score might not prevent you from securing a place, but it can make it more expensive. For buying, lenders require a higher score to offer favorable mortgage terms. Consider your score and financial goals when deciding between renting and buying. Now, what exactly do I mean by it could be more expensive? We could be talking about more down payment. So whereas the average person has to pay only 1 month, you might be asked to pay two. And that is to cover the first and last month's rent, or any denomination of which. But it's in case, well, in essence, it's supposed to be in case there's damage to the property. It shouldn't be paying rent at all. But in worst case scenario, that should cover the time for you to leave while the property is being taken care of. But I digress. At the end of the day, the important thing is that a credit score that's higher will save you money in the long run. A lower credit score will always cost you more. Even if you go to finance a car, a lower credit score will cost you more. Number 9, working with professionals. A credit counselor can guide you on providing your credit score on improving your credit score. Real estate agents are also valuable allies, helping you navigate the buying process and providing advice on improving your credit to secure better mortgage terms. So I am here to support you in the home buying process with the contracts and with the real estate aspect. The credit counselors and mortgage professionals, they're the ones that can talk to you about the financing. Mortgage officers will always tell you that their wheelhouse is the mortgage, so they will always divert to a credit counselor. And a credit counselor is just someone that just counsels you on your credit, helps improve what you got, and helps establish good habits to get you onto the road to financial freedom, because being in debt is not being financially free. Number 10, last one, myths and misconceptions about credit scores. Closing credit cards doesn't always help your score. Sometimes it can even hurt it by reducing your overall available credit. Also, higher income doesn't automatically mean it's a better score. It's about how you manage the credit you have, not just how much you earn. And that is truly the trickiest part sometimes, because I face it all the time when I have clients that are very well qualified, but they get edged out by another more qualified client. And it's very difficult to tell someone, hey, you're doing great, you're financially on it, you're succeeding, you're thriving, you're doing well, but this person's just doing a little bit better. And the landlord decided to go with that person. Those are hard conversations to have. But you have to remember, and this is why I always implore you on knowing where you are with your score and knowing what you have going on so that no one takes advantage of what you don't know. If you know what your score is, if you know what's on your report, then you won't be surprised when a landlord denies you or accepts you. Now, you can always ask for feedback when it comes to a rental application, and they may give it, they may not. It really depends on what the landlord's stance is on that. But for the purposes of this lesson, when you close credit cards, remember, we want to stay above, well, below 30%. So if we take away this available credit that's on this credit card, it changes how much of full available total credit we have. And therefore, our ratios change and our debt could change. So taking away that card could potentially give us more debt than our available credit. And therefore, now we're not only in debt, but we're also a lower score because we have a higher debt to income, well, debt ratio on our credit score. So credit can be very frustrating. Personally, I've struggled with credit in the past. But once you handle it and once you get control of it, once it becomes something that you realize that it's in your dominion to do, and you start to safeguard yourself from making the mistakes that you did before, you can really build on credit and build yourself a financial future that's very much affordable. It's just, you have to think about it. You have to be conscious and intentional in your actions and start today. To recap, today we were talking about credit scores, your key to renting and home buying success. Number one was, what is a credit score? It's a score that identifies your credit worthiness anywhere from 300 to 850. Why your credit score matters in renting: it shows landlords how likely you are to pay rent on time. Number three, why credit scores are crucial for home buying: they again show mortgage lenders how to approve you on the loan and for what interest rates they can offer you. Number four, factors influencing your credit score. Remember, 35% of your score is your payment history, and 30% of your score is your credit utilization. So take that into consideration, that that's almost 60% of your score is being impacted by just those two things. Number five, credit score ranges and their meanings. The range can be anywhere from 300 to 850. 579 and below is poor, and 800 plus is excellent. So keep that in mind. Number six, strategies for improving your credit score. To improve your credit score, always pay bills on time. That is the start and the end of it. Hey, if you pay it on time, you'll be doing great. And don't forget, credit utilization also matters. So don't spend more than 30%. Number seven, avoid common credit pitfalls. One of the worst ones is having high credit utilization. So don't spend more than that 30%. Number eight, renting versus buying. How credit scores factor in. If you have a lower score, it might not really be affordable for you because you're spending so much on rent and or have so much other things that you have to pay at a higher rate just because of your lower score. Remember, having a low credit score impacts all aspects of your life, not just home buying and leasing. In your car, a whole plethora of things that your credit is actually, jobs, your credit's used for, just think about that. But number, where were we? Number nine, um, working with professionals. A credit counselor is a great option if you want to talk to someone that can help you navigate credit and in your particular situation, in your particular state. Number 10, myths and misconceptions about credit scores. Closing credit cards isn't always a good idea. Remember, we have to keep in mind the credit utilization score and percentage, better said. We don't want that to be too high. We want it to have it below 30%. So if you have any other questions, feel free and reach out to your local credit counselor, not to me. I am a realtor, not a credit specialist. So talk to a mortgage lender, talk to a banker, talk to a credit counselor. They can talk to you about your particular case. I can help you buy and sell houses and help you through the contract and can tell you, hey, this is the type of score that will get you, this type of loan most often. But I can't really dive into what it would take to help you improve your score. There are whole organizations dedicated to that, and a lot of them are actually free. So look into credit repair, credit improvement, and government organizations that work with that type of client, because really they have tons of programs that can help you get back onto the road to financial freedom. So never think it's over until it's over. I hope you all have a great night. Thank you all for tuning in. Tomorrow we're going to have another double header. We're going to have another open house live from 2 to 4 at some point, and then we're going to be doing our top 10 weekly real estate news stories of the week. So I hope you'll join me for that, and you will tune in again tomorrow. I am Hugo Quintanilla, a realtor licensed in Maryland with Long and Foster. My email is hugo@lnf.com. My website is yourrealtorhugo.com. And my phone number, 240-389-4846. Thank you so much, ladies and gentlemen. I will see you all tomorrow. And thank you again. Take care. Have a great night.